Welcome to video number 22 of our Forex trading training series, Ichimoku Kinko Hyo. In this video I've come straight to the price chart. This is the US dollar Japanese yen. It's a weekly chart. The reason I've come straight to a price chart and not given an overview beforehand is I feel any demonstration I can give on the Ichimoku Kinko Hyo is best given on a price chart with real price data. As the Ichimoku Kinko Hyo is slightly more complicated than the average technical indicator, it's best teaching from a price chart with the indicator on that chart. So the Ichimoku Kinko Hyo can look a bit overwhelming, but believe me, as I break down this indicator, it's a lot easier than it looks. As mentioned, this is the US dollar Japanese yen, and it's a weekly chart. If you couldn't guess from the name of this indicator originates from Japan, and from my experience this indicator actually is more reliable when used as part of technical analysis on currency pairs with the Japanese yen in and other Japanese financial assets. So let's take this indicator step by step, and by the end of the video you will have a good understanding of how to use the Ichimoku Kinko Hyo and how it can benefit you in your trading. Now, price is clearly downtrending. Hopefully you can see the candles through lines that are on the chart, but we have a series of lower lows and lower highs like so. And to start off with, let's look at these two yellow lines. We have two yellow lines on our chart, and the space between these yellow lines is coloured in a yellow colour also. This is referred to as the Ichimoku cloud, and the purpose of this cloud is to act as a potential support or resistance area within the market. Generally, this first yellow line or orange line is used as a first support or resistance area, and then the second line is used as a second support or resistance area. If price is downtrending, obviously this first line is first resistance, this second line is second resistance. If price is uptrending, obviously the lines act as support. You'll notice that price goes for a push. When it pulls back, it reaches dead on this first line, our first resistance, and falls on the downside. Price then comes back up, doesn't quite touch this first resistance but starts to come down. It starts to touch here and again here, and price continues on the downside. And then a third time price pulls back, we break the first resistance. Let's zoom in a bit so you can see this better. We break the first resistance, which is the first line. Price is rejected off the second resistance, and price falls on the downside once again. We have a bit of a pullback here. Price doesn't quite reach the Ichimoku cloud. We have a bearish engulfing. Price falls on the downside, and then I believe we start going on the upside and have an uptrend. So as price is now uptrending, this first line acts as first support, this second line acts as second support. So it's as easy as that, not as complicated as it looks. The second part of the Ichimoku Kinko Hyo I would like to look at is this green line. Now this green line shadows actual price. You'll see we have this double dip, and then we come up and make this head and shoulders sort of pattern. This is actually the price data here. We had the double dip, and then this head and shoulders pattern. So this green line mirrors actual price data. Now when this green line clearly breaks the red and blue lines, this can act as a signal that price is going to reverse. It's a bit like a moving average crossover. So when this green line comes from below the blue and red lines and goes above, that's a strong signal to buy. And when the green line is above the red and blue lines and closes below, that's a strong signal to sell. Now, I'm not being too technical in my wording here. I'm using blue lines, green lines, red lines, and I also haven't told you how any of these lines are calculated. But the purpose of these videos isn't to give you all the technical spiel or teach you how indicators are calculated, but rather how to use these indicators to trade the Forex markets. That's the whole purpose of them, and that's what we want from these indicators. So let's look at some examples of this green line passing or crossing the blue and red line. So let's go back. Okay, so this green line clearly breaks the blue and red right here, which is round about here on our chart. Round about here, that's the signal to sell, and price falls heavily on the downside. We have some times that the green line passes like the blue line or the red line, but not both. So that wouldn't act as a signal of price reversal. So let's carry on following this indicator and price. We have a clear break here. So we would have gone long there. And then we have another clear break here, so we would have gone short there. So two false signals, but then this last fourth signal, which is a break here. So the green line is here, comes up, breaks this blue and red. So go long here would have gained us a huge profit as price moves strongly on the upside, similar to the first signal we looked at when price moved on the downside. The last two lines of this indicator are this red line and this blue line. The red line can signal short-term price direction. So when this red line is moving down, it can act as a signal that price is going to move on the downside. And in this demonstration, it is. You'll notice this line sometimes moves horizontally, signaling that price is ranging. In this case, it is. And sometimes it will move on the upside, and in this case, it is. Please remember that this red line is for short-term price direction. Though you'll notice when we have big swings in price, such as here on the downside, our red line continues to move on the downside. And when we have this major push on the upside, which we could have got on by using the Ichimoku Kinko Hyo crossover, you'll notice the red line is moving strongly on the upside with price. The last part of this indicator is this blue line. Once again, this can show us short-term price movement. If price is above this blue line, it can act as a signal that price is going to move on the upside. When price is below this blue line, it's a signal that price can continue to fall on the downside. Such as here and here. I do understand I haven't been very technical in my wording in this video, but I'd rather spend the time teaching you how to trade with these indicators rather than learning how these indicators are calculated or what each line of the Ichimoku Kinko Hyo is called. The name of the indicator is enough for me as it is. There may be parts of the Ichimoku Kinko Hyo that you like and some parts that you don't like. So there's no reason why you couldn't just use the Ichimoku Cloud, support and resistance, or the crossover, if that is what you find most reliable. But there is a lot offered by this indicator, and I think that's why it's so attractive to traders. The Ichimoku Kinko Hyo is used for potential support and resistance, price reversals, and short-term price direction. And as mentioned when filming the USD JPY price chart, you can use the Ichimoku Kinko Hyo for just one of these. The Ichimoku Kinko Hyo is a lot more reliable with currency pairs with the yen, JPY, and other Japanese financial assets. In the next video, I will give some advice on setting stop losses and take profits.